There we go. So let's continue with our discussion here. And ladies and gentlemen, we have been discussing about tax compliance and how business systems or accounting systems that businesses choose to use affect and are related to tax compliance. We've talked about the aspects and the perspectives of what a tax compliance is. We've already defined what tax is. We've looked at the various categories of taxes and the ways in which these taxes are being collected by the state or by the taxman. We have also looked at the relationship uh, that your accounting system you use in your business with the tax compliance bit of it, how it handles each and every processes at the background, and why it is important. Now, I want us now to bring this to a conclusion by reconciling the system specifications, what you really need to look at when you are choosing an accounting system or a business management system, and then how it plays a critical role in helping you to reduce your tax burden. The most important thing, as we mentioned, and I still repeat here, we said that as a business person, as an investor, your major goal is to maximize profits as you minimize your costs. So, having agreed together that tax is a cost on your business, you must work ways through so that you try to minimize that cost. So that as you minimize the cost, you are maximizing on your returns as a business person. Now, I want us to, before we look at the factors to be considered or what to look out for when you are choosing an accounting system or a business management system, let us talk of some bit which we had not mentioned on. Now, as we talk about taxes, however much it is a compulsory contribution to the state, but then the good news is you can manage your taxes. You can manage it. It is not something out of ordinary. You can find a way to remain compliant. And as you remain, or as you be tax compliant, as your business complies to taxes, it does not just stop about trying to be compliant. What benefit do you get as a business person? That is a very important question that we need to ask ourselves. So now, that is the bit I want us to touch on. That is the bit that I want us to touch on now. I want to look at a case scenario of a business that is already having a system in place, and that system, I want to use diagrammatic representations, diagrammatic, presentation of the same. So I want us to look at a case study, and in this case study, this is the business. This is the business. Now, as a business person, you are running in whichever industry, maybe from the first move by the taxman to introduce the teams, you had purchased a Teams compliant ETR machine. And this your ETR machine is helping you to generate tax invoices. You are able to generate tax invoices using your ETR machine. But then you realize that this your ETR machine, where now you've been keying in the invoices manually. Remember, the team's compliant ETR machines, as I mentioned before, the team's compliant ETR machine, you got them from authorized vendors. And these vendors are licensed by the taxman to be able to sell to you this ETR machine. So you are done that before, and you are running your business on this ETR machine where you are able to generate your sales invoices from it. And also, you are capturing your purchases so that you claim your input VAT. It's okay. But then, along the way, you realize that this your ETR machine, because it is a manual system, you are now in a path to upgrade and move away from the manual Teams system, the ETR device, so that you embrace the eTeams version of it. So you are moving to eTeams. You are moving to eTeams now. Now, as you move to eTeams, you already have a business management system in place. I'm assuming of this business where we can say you are running a small wholesale shop, or you are running any shop, or just just a shop. You can even use the word shop like that. And you're serving clients, you are having your POS system in place, you are having, for example, your inventory management system in place, and any other module that is applicable to whichever industry that you're working in. So this your business management system, it is not integrated with the KRA systems, and you want to upgrade to the online platform of the eTeams online platform. Now, what are the considerations? What are the steps that are involved to make sure that you are able to integrate? We are talking about eTeams integration. eTeams integration. eTeams integration, where now you are integrating your business management system, your accounting system, with the eTeams, the KRA database, so that it makes your work easy. At the touch of a button, you are able to remit your invoices to KRA, and you are able to claim your input VAT in full. And as you claim them in full, you realize that it is going to reduce your burden on the VAT that you're going to pay. Because every purchase, whenever you pay that VAT at the purchase level, you are able to claim that VAT that you've already paid. So now, in that instance, you realize that it is going to play a major role in reducing your burden, your cost in that business. Because when you pay less taxes, you are reducing your cost. When you are reducing your cost, you're maximizing your profits. And that is one of the major objectives of a business person, to maximize profits and to minimize your cost. Good. Now, after we've mentioned that, this integration of your business management system with eTeams, if you need that service, we are here to guide you. We are here to help you through so that you get authorized and licensed vendors who are doing eTeams integration, regardless of the business system you are using. But again, if you do not have any business system in place, you do not have any accounting system in place, we are able to recommend an accounting system which is an online version. It is called cloud-based accounting system. Cloud-based accounting system. Cloud-based accounting system. Now, this cloud-based accounting system, we will help you source for it. And again, at the same time, we will go ahead and make sure it is integrated with the eTeams database so that it makes your compliance headache-free. It makes your compliance journey be very easy. Now, as we mentioned that, there are factors that you need to consider as you choose the accounting system that is cloud-based to use with your eTeams integration. There are those factors we know very well, as much as technology is here with us, and it's a good thing because actually embracing technology will help you save time. It is convenient, it is efficient, and you can always access your data at the touch of a button. Remotely, you can be able to access it, you can be able to work from anywhere and get the reports. That is very good. But now, there are those factors that you have to consider when you are looking at the accounting system that you want to onboard to the eTeams platform. One thing that you need to look at, you have to make sure that the accounting system that you want to integrate with the eTeams, data protection is given a big priority. That is, you have to make sure that there is the encryption, the technical encryption of your data. And this encryption and data protection law must be regulated at a legal standpoint, and therefore this will follow the Data Protection Act. So you have to make sure that your data is safe and secure, because remember, this is a business data and it is very critical for your business. So you have to make sure data security is given priority. Then at the same time, you have to make sure that that accounting system has capability of integration with items. Yes, it must have capability. That system must have capability, because some of these accounting systems that you see are being sold out here, some of them do not have the capability to integrate with the items. Some of them do not have that capability. So you have to make sure you are looking at that accounting system and make sure you ask the vendor. Let the vendor be very clear that it is, you can integrate it with the items database. Yeah, so this tax compliance journey will help you to save your tax burden, to reduce your tax burden. Now, this is a legal way to make sure you manage your taxes. And again, this brings me to something which is very important. What is the difference between tax avoidance and tax evasion? When you talk about tax avoidance, and then we talk about tax evasion, what do we mean? Because whenever you mention something to do with taxes, these two terms, linger around. Do we understand what tax avoidance is and its difference with tax evasion? What do we mean by that? Now, tax avoidance is a situation where you are capitalizing on the loopholes or the gaps provided by law to reduce your tax burden. So, in other words, we are saying tax avoidance is legal. Legal. Tax avoidance is legal. You are legally allowed to avoid tax. But we know very well when you talk about evasion, evasion is now deliberate and therefore it is illegal. Illegal. This one you are not allowed to do. If you are found trying to evade taxes, then you will be culpable to penalty and you can be sued and taken to court. As a business person, that route, you know very well, it will attract heavy legal fees, which you will not want to go to. Now, tax evasion, let me give a very simple description, a very simple difference. Now, when we say tax avoidance is legal, what does it mean? It simply means you are capitalizing on tax, let me call them loopholes. Tax loopholes to reduce your tax burden, to reduce your tax burden, So you are just capitalizing on the gaps in the law so that you reduce your tax burden. Then, when we talk about tax evasion, this is now deliberate. The word deliberate has to be there. This is a deliberate attempt. Let's call it deliberate attempt to avoid paying tax, to avoid paying tax. And being a deliberate attempt to avoid paying tax, therefore, this is illegal. And some of the ways in which people avoid or maybe evade tax, some of the ways in which you can evade tax, that have been found, for example, inflating your expenses. Inflating your expenses as a business person. Whenever you declare expenses beyond the actual expenses, and your intention for doing this is to make sure you pay less output VAT, or you say that now this will reduce your overall corporation tax at the end of the financial year. Whenever this is realized by the taxman, whenever the authorities realize that you are trying to evade taxes, then you will pay a huge burden. You will bear a huge burden for that. So tax evasion is deliberate, but tax avoidance is actually allowed. Now, as an individual, as a person, now we've been talking about business a lot. Now, let's talk about an individual. What are the ways in which you can avoid taxes as a person? On your income tax, what are some of the ways in which you can avoid taxes? We can give examples. For example, some of the loopholes or ways in which you can reduce your tax as an individual is, for example, maximizing on allowable deductions. Allowable deductions on your salary as a person. What are these allowable deductions? For example, we know very well that in Kenya, if you are registered with a pension scheme, a registered pension scheme, a registered pension scheme, that pension that you remit is actually an allowable deduction. For example, if you are remitting, for example, 5,000 to a registered pension scheme or at an individual basis, leave alone NSSF. NSSF is, is a statute. It is by law. Employers have to remit unless you go to the Retirement Benefits Authority and they give you a go ahead to remit your Tier 2 contributions to a private pension scheme manager. But here I'm talking about a completely different arrangement where you are going to do your pension scheme with a different registered Retirement Benefits Authority approved scheme. Now, when you do that, that amount that you are sending to that pension scheme is allowable deduction. So it will help to reduce your tax burden. When calculating your pay as you earn, that amount will be deducted first before your pay as you earn is computed. So at the end of the day, it is going to reduce your pay as you earn tax. Another way in which you can reduce your tax burden as an individual under tax avoidance, because these are provisions by law, so you can capitalize on them and take advantage of them. Another way is to secure a home ownership savings plan. Home ownership savings plan. Home ownership savings plan. Now, whatever amount you remit to a home ownership savings plan is also allowable deduction, and it will be deducted before computing pay as you earn. Another way in which we normally avoid paying a lot of tax is through personal relief. And personal relief is normally provided for by law, where in Kenya today, personal relief is 2,400 per month. 2,400 per month. So this 2,400 per month is a personal relief. It is going to reduce your overall tax that you're paying at the end of every month or at the end of every year, right? Good. Another allowable deduction allowed under the tax avoidance, loopholes in tax in the tax laws that you can take advantage of is mortgage interest. You can go and secure mortgage. We all know what mortgage is, and whatever interest you pay, whatever cost of borrowing you pay for that your mortgage, that amount you pay as interest is actually an allowable deduction. So as an individual, as someone who is working in Kenya here today, already we are giving you secrets. You already know how you can reduce your tax burden. Go and secure a personal pension scheme. That amount you are remitting there is an allowable deduction. It will be deducted before computing your tax, your pay as you earn. You can also go ahead and secure a home ownership savings plan. That amount you'll be paying there is also allowable. Again, personal relief is by default. Normally, if whoever is preparing your payroll is not taking care of it, then you need to recheck again, but it is something that reduces your tax burden. Then you can go a notch higher and secure some mortgage. Mortgage is for mortgage comes in various ways. Employer can help you to secure some mortgage, or you can approach a financial institution, for example, bank, and take a mortgage. Yeah. Whenever you get this loan to build your home, to secure your housing and things like that, the amount of interest you pay on that your mortgage is allowable deduction. It will be deducted before your tax is computed, the tax that you're going to pay under pay as you earn. Then for a business, this loophole that you have to also maximize on. I've talked about individual. So these are ways in which an individual person can reduce their tax burden under the loopholes, or maybe under the schemes provided, capitalizing on tax avoidance act. Now, you as a business, whenever you reclaim input VAT, that is provided by law. It is allowed for you to reclaim your input VAT. And that will help you to reduce your tax burden. You can choose not to reclaim your input VAT, but at the end of the day, you are the one should be shouldering the burden of paying the full tax. And why should you pay full tax when you can reclaim your input VAT to reduce your burden? Everyone would want to pay less. So this is one of the ways in which you can capitalize on the gap or the loopholes provided by law under tax avoidance. You remain compliant, but you reduce your tax burden. And actually, when we talk about reclaiming input VAT, this is what we've been talking about here. When we talk about the relationship between an accounting system and tax compliance, now this is where we are talking about that reclaiming input VAT. It is one of the ways in which you can maximize your profits by reducing some of these burdens, and tax is one of the burdens that you have to reduce, and it's one of the costs. We know already that tax evasion is illegal, so you must make sure you take advantage of these legally provided ways so that you can reduce your taxes. Now, having said that, this tax compliance, and let me talk about reclaiming that input VAT. For those people who are inflating their expenses so that they get to pay less taxes, that is under the tax evasion, the one which is not required by law. They have to know one thing, that the taxman normally, their systems, they know very well that your income must match with your expenses for you to be able to reclaim your VAT. Income must match expenses. In other words, the income that you declare that you've been able to produce in a month must be matching up. It must be, the graph must be normal, depending on the expenses that you are also going to put there. And we know very well, those who are running businesses, you know very well that KRA normally send auto assessments, VAT auto assessment letters and emails. Whenever they send these VAT auto assessment letters and emails, they are just giving you information about the VAT that you had filed for the previous month. So those informations, if you're an accountant and you are the one doing the filing and you normally receive those emails, you have to look at them very, very keenly because they are very important. Some of them have critical information to always help you understand if you are compliant, if there is any injunctions, if they seek any clarifications concerning your VAT which you filed. Now, I want us to move to something very interesting. I want us to move to now an area where we are looking at what are the factors that you have to consider, when choosing an accounting software for a small business. That is what I want us to look at now. Now, you're running a business. I'm assuming here you don't have an accounting system. What do you consider when you want to look for an accounting software or a business management system to run on? Now, that is the next thing that we are going to discuss. Keep it here. Subscribe, follow, and share so that you do not miss some of these very educative and very critical sessions. Let's learn together. Let's always learning never stops. Let's get it right. Let's discuss. Let's learn together. See you in the next one.